All right, ladies and gentlemen, let's talk about why I think AMC stock is about to go on a parabolic rally here in the next couple of weeks. We have Citadel that is loading up on their call position in a very dramatic way. And let me tell you, Citadel or any other firm is not buying AMC because they like the long-term fundamental picture for the theater business. A lot of people think theaters are going to go away. That's still a topic of conversation, even though we know that is not the case. So I want to take a look at Citadel's 13F filing, talk about why these major investors are buying into AMC stock, some of them for the first time ever. And Citadel now has double the amount of call exposure as they have put exposure. This is very different from the last 13F filings we got from good old Citadel. So hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. If you guys want access to all of my trades in real time, I will be making some options trades here by the end of the day today on AMC stock. If you guys want access to that, link down below in the pinned comment. Now let's talk about it, guys. So Citadel is making some changes, let's call it that, to their AMC position. So Citadel did decrease their share position by 88,000 shares, probably for some kind of risk off event, right? Probably their algos did this. Doesn't even matter. I'm not even paying attention to that because the exposure that is on the call side of this is massive. So Citadel has a call exposure worth almost 10 million shares. Their put exposure worth 4,889,000 shares. They increased their put position by 31.74%, but they increased their call position by 41.16%. And like I just previously said, these guys, they're not bullish on the long-term outlook for AMC stock. They're not bullish because earnings have been good. That's not why you're seeing the amount of institutional investors and the amount of shares they own continue to go up yet again month over month. That's not what's going on. They're not bullish on theaters. They are bullish, in my opinion, on the prospects of a short squeeze. And if we take a look at this article, just right here, it says AMC's impressive performance has caught the attention of several high-profile Wall Street institutions who have either opened a new position in AMC stock or increased their stake. Ray Dalio's Bridgewater Capital purchased 21,700 AMC shares in Q1 2022, while the hedge fund sold its stake in Tesla. So you sold your stake in Tesla, but you bought yourself 21,700 AMC shares, which is not really a huge amount for Ray Dalio. It's about $600,000, so it's over $500,000. And this is the first time they have ever bought AMC, period. They've never owned AMC before this last 13F filing, so that's very interesting. But look at this. According to Fintel, Goldman Sachs increased its stake in AMC by 36%. Goldman Sachs, if you guys remember, Goldman Sachs, Citadel, and Virtue, all of their market makers, their algos, their activities in the dark pools, all of that is under investigation right now. And they increased their AMC stake by 36% to just over 3 million shares on May 16th. Lots of institutional investors have bought AMC stock over the last few weeks, which could trigger an epic short squeeze leading up to summer 2022. But I think more importantly than all of this is kind of the context behind it, because I think we are onto something that a lot of big money institutional investors don't really want you to know. And that's that damn Executive Order 14032, where institutions can no longer use Chinese collateral to service margin calls. And that should go into effect June 2nd, June 3rd, because the last year where it went into effect, where they could use Chinese collateral, securities as collateral, was June 2nd, and that was extended for 365 days, probably to bail out the hedge funds and to stop AMC's parabolic rally. But that was literally the peak that we seen, where the stock went up 95.22% that same day, June 2nd, 2021, and then it fell almost 18% the next day, and then following a almost 7% drop the day after that. So it's very obvious the direct correlation this executive order has with AMC and its parabolic rally. So I do think we're looking at something along the same lines of what we've seen here, but I do think AMC stock will likely hold up better than not during this next time around. And why do I say that? Is because you've seen the liquidity levels in the markets basically drying up to their lowest levels we have seen in a very long time. You've seen massive amounts of wealth destruction here over the last couple of weeks. You've lost a lot of money. The Nasdaq is down almost 28% year to date. S&P is down 18.56% year to date. And if you look at the bond market, if you look at TLT year to date, this is an ETF that tracks the 20-year treasury bond. That is down 18.72% year to date. So everything has gotten destroyed. The bond market, stock market, the crypto market, real estate's not doing so hot. The only thing that is doing hot is apparently art in 2022. Now, why is this such a big deal? Because if you're thinking about servicing a margin call and you have equities that you put up as collateral, well, now those same equities possibly are worth half the amount. After all, the Nasdaq 100, over 50% of stocks are down over 50% from their all-time highs. So you've seen the amount of dollars that could potentially service margin calls decrease, right? Because there has been a lot of margin calls. Collateral values have went down dramatically. You've seen a lot of haircuts and a lot of rule changes that have been implemented. Even something like Apple is going to get discounted 10 to 20% from its spot market price when you go to service a margin call because of the volatility that we have seen. For an example, if you had we'll just keep it simple. One share of Apple that you wanted to put up as collateral today, but Apple has fallen like 15% in the last 2 weeks. You're going to go ahead and take that spot value and you're going to deduct 20% from that. And that's the level that you will use for the margin call, because who's to say Apple couldn't fall another 10 to 20% in the future? And if you are a bank or you are somebody that is lending out your stock that people have short positions on, that people have margin debt on, you're not going to just accept collateral at spot value like you would back in June or back in January of 2021 when equity values and valuations and just prices overall were a lot more stable. You discount that a lot more now to factor in that risk that we have in the markets. And that's just the bottom line to it. That's just how the game goes. And when you're talking about massive portfolios that have lost a massive amount of money, I mean, look at Tiger Global. Look at Melvin Capital. They have gotten absolutely destroyed. Let's take a look at Melvin Capital. They're just shutting down their whole hedge fund. Like, their whole hedge fund is shutting down. Melvin Capital to shut after heavy losses on meme stocks, markets slump. So they're shutting down. Look at Tiger Global, for an example. Losing massive amounts of money. Tiger Global slashes bets on tech groups after stock market sell-off. The mauling of Tiger Global. They've gotten destroyed. They've lost like $17 billion here in the last 5 months or so. It's been terrible. Yeah, they've lost about $17 billion this year, and that's a loss. Like, that's not coming back for a while. So these are only 2 funds out of hundreds, if not thousands. And if it's happening to these guys, it's happening across the board. That's just what it is. So if you start to get a short position going against you, your equity value is going against you because they're all down. Look at the hedge funds. But you also got your short positions that were working that are now starting to cripple your portfolio. You don't have enough collateral to service a margin call. And on a risk to reward basis, a lot of these funds couldn't even handle, another $30 rally in AMC stock, just like we seen a month or 2 ago, because what has happened in the markets and what a different situation we are even in now than what we were just 2 months ago. Situation is rapidly evolving and it's not getting better. Let me tell you, that is not getting better. So when you add all of this together, I do think we are in for a parabolic rally here in the short-term future. I'm looking at targeting the June 17th, possibly the June 10th call options. And if you take a look at the interesting flow sentiment, that's exactly what other hedge funds are doing as well. Look at all the call activity for the day. We're looking at 4 orders totaling $5.05 million, positive order value of 100%. Look at that. June 17th, $11 call. May 27th, $13.50 call. A January 20th, 2023, $145 call. May 27th, $13.50. May 27th, $13.50. A lot of May 27th calls coming through right here, but a lot of June 10th and June 17th calls as well. And I think this can give you a pretty good glimpse into what institutional investors expect to happen with AMC stock over the next couple of weeks. June 2nd, June 3rd, that's going to be a very important event in my personal opinion with this executive order. But nonetheless, the short interest of free float is sitting at about 22%. Current shares that are sold short of 113.24 million. Cost bar max of about 4%. Considering the volume that we have seen on any given day in between 30 and 50 million, even look at yesterday's volume. That was at 53 million. Today's volume is at 33.5 million. A couple days ago, 38 million, 40 million, 58 million. You're not really seeing a lot of volume, right? So if you got that many shares that are sold short, even if 30% of the short interest was covered on a day, or 10%, whatever the case is, that's going to be the average daily volume that we have been seeing as of recently. Even if you go back further than that, when AMC stock was just continuously pretty much going down, the volume was in the 20 million range. So there is a lot of fuel on this fire, even on the option chain as well, on the puts that are in the money and the calls that are out of the money, to see a lot of buying pressure from that. And if you do factor in all of the shorts that market makers have on for the puts that are on the option chain, you could probably add another 15 to 20% on top of this short interest. So the real short interest is much higher than it's led on to be, and there's much more potential buying power than even meets the eye for AMC stock. And consider this for a second as well, that everybody that has gotten out of AMC at one point in the past will be the people that look to buy back in. There's just something that happens to the psychology of investors when they were in a stock for a short squeeze, for a trade, and then it finally does go through a rally. People tend to flock back into that stock, even potentially more than they were in the stock to begin with. People get that FOMO and they don't want to miss out. So that's really why I think we're setting up for another parabolic rally, and I'm really targeting, $50, $60, $70, $80, $90, $100 on this next rally. It could be even much higher than that, considering what is happening with liquidity, stock values, collateral, and how that's going to be used. Could go even higher. I don't think a lot of hedge funds are going to have a choice this time around but to cover on some of those short positions. So I do think it's looking much better than not here in this current moment. And that's really my thoughts on it. I still think summer, possibly end of summer, is when we will get the end stage of the MOAS. But it is very possible here in the first couple of weeks of June, or in the month of June period, that we will see a parabolic rally in AMC stock. So that is going to be all for this video. Hit that like button, subscribe to the channel, source comments, questions, or concerns down below in the comment section. Let me know what you guys think about all of this information. If you guys want access to all of my trades in real time, link down below in the pinned comment of this video. You might make some money off of this one. Hopefully, not a guarantee. Options are risky. When you join that, know the risk involved. You could lose all your money with options. You guys get the spiel here. But I do think there's a massive opportunity coming. But obviously, don't take my word for it. If this information resonated with you and it makes some sense, then feel free to do what you want to do with it. Thank you guys for watching. Enjoy the rest of your day, and I will see you in the next one.